Good evening, everyone. Hi, Ezekiel and Sharon. I hope you're doing well. Good day, Theophilus and Sonia. Dr. Harina, I'm always confused with your name, but welcome to the webinar. Okay, you're welcome, you're welcome. We'll give it at least 2 more minutes for people to join into today's webinar. As we are waiting for other people, maybe we can just introduce yourself on the chat box. Let's you say where you're from so that we can familiarize ourselves with the diversity of attendees today. Thank you, Helen. Sharon from Zambia, Helen from Uganda, thank you. Yusuf from Ghana, Sonia from Nigeria. Welcome. For those who just joined in, welcome to today's webinar. We are on the introduction part. We'll give it 1 more minute for people to just say where they're from to familiarize ourselves. Hilda from China, you're all welcome. Okay, we are 2 minutes. Dominic from Kenya, Elizabeth from Kenya, you're all welcome. So we can start. Yes, Contea, thank you all for joining in. Welcome all. We can start today's webinar. I'll introduce myself. Just before I introduce myself, I would like to congratulate you all for the effort you've made. We are now on the week 4 of the academy. And today this week we're going to focus on business and financial management. And today we're going to major into introduction to budgeting. My name is Joyce Shikuku, and I'm the East Africa Regional Coordinator. I'm based in Kilifi, Kenya. And we have our lovely presenter here. Her name is Professor Elizabeth Kalunda. She's a distinguished scholar and an influential figure in the field of finance, accounting, and education, with a PhD in business administration, specializing in banking from the esteemed University of Nairobi. She has solidified herself position as a leading expert in the financial matters, and her academic journey also includes an MBA in accounting from Moi University and a Bachelor of Education in Family and Consumer Sciences, Home Economics, and a teacher. Professor Elizabeth is a visionary professional and accomplished educator as a dedicated researcher, leaving an indelible mark on the fields of finance, accounting, and education. Her passion for knowledge and her commitment to empowering others make her a true leader and an inspiration to all. Welcome, Professor Elizabeth Kalunda, and you are taking over the session now.
Okay, thank you so much, Joyce, for that very lovely introduction. Yeah, so delegates, as you've heard, I'm a professor in finance. I'm also a certified public accountant. I'm a lecturer, I'm a businesswoman, and I'm so passionate about passing knowledge. So today I'll be taking you through a very interesting session and a very mandatory concept when it comes to running of businesses. I've been told that most of you are aspiring to start your own businesses, and it's very important that the session that I'll take you through is going to guide you on matters relating to money. So from the chat, I've been able to see who you are in terms of your names and also in terms of your country of origin. And I'm happy that this is quite a great mix in terms of your orientation. And I'm also happy I've seen some of you from Kenya. So maybe one day, if we meet, it will be actually my pleasure. So I'll start the session now. I'll start by projecting. Yeah, so, and dear delegates, in case you just have a question, You are allowed to ask the question. You don't have to wait until the session is over. So you are free to either raise up your hand or put it in chats. I hope I'll be able to just track the communication as it comes through the chat. And I'd also request Joyce, in case you just see any pressing question, please let me know that is going to be on chat. So with that, can I greet all the delegates who are here? Good evening. Okay, so I'm assuming maybe you are not able to communicate, but I'm hoping you can hear me clearly. So today our session is going to be about how to create a startup budget. And this is a very critical topic when it comes to the success of any business. And we all have heard the cliche that says, if you fail to plan, then you definitely are planning to fail. So we don't want ourselves to start businesses and then we fail. So whatever we'll be discussing will be one of the steps that will help us have very prosperous businesses. So what are the learning objectives in today's session? So I'm hoping that by the time we are done with this session, you should be able to identify items that appear in a startup budget. Remember, this is a startup budget, so it is slightly different from a firm that is a going concern or a firm that has been there. But I mean, in terms of principle, it fits in the principles of any other budget. So we are also going to see how to prepare a startup budget under different scenarios. And then finally, we see how to prepare a cash flow statement. So as a start, I'm sure you'll all agree with me that starting a new business is very exciting. And I wish you could be able to respond. I'm sure maybe some of you have started businesses, and there's that excitement that comes with starting up a business. But then something very important is that that needs to come to your attention is that 90% of startups fail. So that means 9 out of 10 startups fail. In other words, if I reverse it, when it comes to startups, only 1 out of 10 succeed. So you can see that figure is very high. And we don't want your startups or any person you know that you associate closely to be part of the 90%. Now, the big question is, why do they fail? Now, if you look at most startups or most businesses that are started, it is not, actually the businesses have very good ideas about how they are hoping to operate the kind of products they're intending to bring into the market. So when it comes to the failure of these startups, they don't fail because they had a bad idea. Actually, they had excellent business ideas. Again, it's not also because they did not pick the right market or they never had enough passion for their products. The most common reason why startups fail is because they run out of money. And therefore, that is why this topic is very important in helping us not to be part of that statistic of startups that fail. So we want to see how can we avoid being part of that 90 by knowing how to come up with a budget. And I've said this can be a startup budget or it can be a budget for a continuing business. So just as a part of introduction, before we go to the nitty-gritty of what this startup budget is all about, it is good to understand what that is. So by definition, we say that a startup budget is simply an estimate of how much it will cost to start and run your business. So just note that this is an estimate of how much it will cost to start and run your business. So this means that this is a budget that is prepared before the business has begun. So it is part of the preliminary planning, the preliminary documents that are needed before you start a business. It is also important to note that a startup budget is a very crucial tool because it helps you manage your finances, and by doing that, it ensures long-term success. And remember, when we started, I said that if you fail to plan, actually you are planning to fail. So a budget, as we all know, this is a planning tool. So for the startup budget, this is a very important tool that just keeps you on the right track as you start your business. So in terms of details or in terms of contents of what it entails, we are saying that this budget enables you to get the initial expenses very clearly. Remember, when you start a business or when you're getting into any venture, there are expenses that you will incur. Now, it is important that before you start that business, you have a write down of all the expenses. These are the ones we refer to as the initial expenses. So the budget will help you to write them down and know their value or know their cost. Again, the budget is going to help you to set up financial goals. Remember, when you put everything down in writing, you can actually be able to note that from my projections, from what I thought, I'm not going to make profit, or I'm not making profits as much as I thought, or my expenses are too high for the kind of businesses that I'm doing. So once you have a startup budget, it actually enables you to set financial goals. And we are going to see how that is done. And then finally, and very important, is that when you have a startup budget, you'll be able to make informed decisions. Remember, any decision that is made out of guesswork, any decision that is made without any supporting basis, that decision is likely not to solve the problem that it is meant to address. And therefore, the startup budget enables you to make informed decisions about your business. Now, I can also say that this budget should include all the money will come from. So let me repeat that. So this budget we must include where the money will come from. Remember, when you want to start a business, you can have very lovely ideas. You say, maybe my parents will give me this much, I will sell off this. But it is good to put that down in writing so that you have an idea of the amount that you're going to get and also the source. So the budget will help you to have to know where the money will come from for starting the business and also to continue to operate the business. So I just want to note here that in terms of where the money is going to come from, that one, you can have many sources. Maybe you can have a loan, you can use your savings, you can get maybe some money in kind from your friends. But the most important thing is that as you start operating, the business should be self-financing. And that is why now this budget will help you to just have an idea of whether the business is going to be self-financing. And then note that when you prepare a budget, don't be so hard on yourself in case you find that what you had projected is not what is happening. This is because budgets are prepared on assumptions. Budgets are prepared in advance before the business starts. So other things can crop up that you had not accounted for. So it is just good to note that budgets are never 100% accurate. But ideally, if you do a good budget, the accuracy of the budget, that is in terms of the actual and the planned, the differences should not be very high. And then as you prepare a budget, note that it is important to have data and assumptions. Remember, this means that when you're preparing a budget, you need to have a point of reference. Let's say, for example, I want to start a business, let's say let me just talk of a salon. If I want to start a business that is offering services, that is addressing services, I need to figure out how much are businesses that are in this sector or in this section are charging. So this is historical information. How much are maybe the products that I'll need cost? How much do the employees normally get paid when they're in this space? So that is historical data. So note that you'll be using historical data to project about future expenses. And again, you need assumptions. So a good assumption, an example of an assumption, because anytime when you're planning about the future, you're supposed to state down the factors that you have assumed to guide or to support the figures that you have. So the assumptions would be the ladies in your area, that is, if I'm still on my salon example, want to look beautiful, so they will always demand for your services. Otherwise, if you are in a situation where most of the ladies have short hair like mine, you might plan, you might just note that having wigs or chemicals might not be a very sellable product. So just look at what are the assumptions are you having. So again, you can even say the economy is going to be good, so people will have more disposable income, because a saloon is, I would put it more of a luxury. When you look at the basic needs, they are basically food, shelter, and clothing. So for a saloon, this is where you put your extra money. So you have to look at what is the economic situation. Will people are likely to have extra salaries or extra income? And therefore, they'll now be able to have some disposable income that will come now for these other non-essential items. So budgets will combine both historical and assumptions to predict how much money your startup will need. So, and because of that, the accuracy will not be 100%. And then what you will notice that as you continue with your business, because now you'll be dealing with the reality, your budget will keep getting finer and finer. So the variances between what you had budgeted and what is the actual expenses or income will be close to each other. So that's an introduction about that. So maybe just to be sure that we are together, Joyce, I'm hoping the delegates are able to lead, they can talk, or they can even just indicate by having those emojis that show that we are together. Are we together? Are we together?
I don't know if they, we need to allow, they can just drop a message because they're not allowed to talk. Yes,
Yeah, the
yes.
audio is not on good, but I can see messages. Awesome, awesome, awesome. Yeah, so feel free to good. Thanks for that assurance. Yeah, at least I'm glad that we are all following. So again, part of the introduction before I go to the real bit is when you're coming up with a budget, it is very important to understand your business model. Remember, my business, even though it is a saloon, it will not necessarily be the same as that of another saloon. So you really need to sit down and ask yourself, what is your business model? So by this, I mean, one, who will I be selling to? Who are my clients? Am I targeting the higher niche in the society? If that is the case, then that means that my products are going to be more expensive, or my services will be more expensive. Am I targeting those at the lower, the bottom of the pyramid in terms of the economy? So if that is the case, then it will mean that I'll be selling to very many people, but the prices will be low. So it is very important to ask yourself, who are you selling to, and what exactly are you selling? And for me, when I look at what you are selling or what services you are offering, it will be important to just categorize and say, are these essential services that you are offering that everybody will have to, will need them? Are these luxury items? Are these mid-luxury? So once you have an idea of that, you can be able to have a very clear just projection in terms of the business model that you have. And then also you need to identify what are your revenue streams. So like if I have a salon, what are the products that I could be offering? And I would want you in your charts to just put it down in chat. Type down if I'm having a salon business. Sorry for the men, so I can let me combine. It's a saloon and barber business. So my question would be, what are the different revenue streams? Because all those, I mean, for that business, we don't have only one item or one service that we are offering. So I would want to see from the chart, what are the different revenue streams, so that once you are able to identify the various revenue streams, you can be able not to even quantify and know how much money you will make. So I'm waiting to see what you're chatting so that I can just confirm again, we are together in terms of identifying the different revenue streams within a business. And then the next thing is, you need to estimate your sales and pricing strategies. Okay, so let me go to the, let me see the chart. So yeah, so, and I've asked a question, so I've not seen the answer. So my question is, if you are running a saloon and barber business, what are the different revenue streams? Where would you make money from? So that when you are capturing, this is a sale, this is a sale of what? So I can see Francis has said you'll be selling products, yes. So there are some barber shops and saloon where they will tell you, we are offering maybe this kind of oil for the hair, we are offering these other maybe makeups to complement what you have. Yes, so can I get more response? Good. I can see Akelo has said doing makeup, that is good. So that is another revenue stream within the same business. Somebody is also saying, I think a salon, you can sell other items. Yes, and they have been mentioned up there. Good. I can see Elizabeth has quite a number of things. Good. Yeah, so they'll be plating. You can see, so this is a salon, but it has different products. There's plating, there's weaves, there's wigs, hair products, and nail additions. That is good. I can see, yeah, Helen is talking about artificial hair. Yes, I can see Paul talking about doing pedicure. Good, yeah. So yeah, so I'm glad that we are all together and you can be able to identify different revenue streams. So now for each of these revenue streams, you really need to ask yourself, how much can you get from them? And once you look at those revenue streams, you can actually see there are some activities that will need very little. I mean, in terms of input and resources, they will need less, but they'll be very highly priced. So that is a business model that you can adopt, where you say, there's this product that I have, maybe the cost of offering that service is 100 shillings, but since I'm maybe the only one who is offering that service, I can sell it for maybe ×2 or ×3 of their price. So that will help you to come up with a very good model. And then I can see Afondo has said you can have soda in a fridge. Yes. So thank you for those examples, and I'm happy that we are together. So let me just mention something here about about estimating the sales and pricing strategy. What are your sales projection? Now, any business that you start, before you start, you need to ask yourself, how much are you expecting to sell, and also what is your pricing strategy? And the pricing strategy will depend on who your clientele are. So I said, if you decide to take a niche market, which is up in the bottom, in the pyramid, in the economic pyramid, then you'll be charging your items at a premium. Your customers will need premium services. So like the example there of sodas being sold, in a premium salon, you'll be giving free sodas. I've even gone to some salons where they give wine, they give coffee, they give snacks. So these are part of the premium packaging. But you know that at the end of the day, whatever you cost, your products has captured in that price of the add-ons that you are giving your customers. So those are some of the things that you need to figure out before you start your business. So now, how do you now start your plan? Now, one, it is important that you define your short-term and long-term financial objectives. So like this is a business that you are yet to start. So you should ask yourself, in the short run, where do I want to be? Where do I see this business? And then also you ask yourself, maybe 5 years from now, where do I want this business to be? So when you are able to do that, it will mean that as you work towards growing your business, you have a goal at the end. And that is very important, because without a goal, you'll just be operating. Maybe you make some profits and you think that you are okay, but it is good to have the short-term and long-term objectives. And if you look at the other half of the slide, I've given you examples of such objectives. So like, for example, the short-term goal or objective will be to achieve profitability within the first year. Now, this is important, and this is a tall order for a startup. Remember, most of the startups in the first years, they might not be making profit, because there are so many expenses that maybe were initial that need to be covered. Maybe you are new in the market, you don't have that customer base. So a goal like this is an ambitious goal, and it will push you to do much better or to work harder so that you can be able to make profitability. And actually, it is important if your business is profitable, because for some startups, they start giving up and now saying, I've been working so hard. If I just do a revenue statement, whatever I'm getting and whatever I've put in seems to be taking me to a loss situation. So it is important that you have a short-term goal that touches on profitability. Another goal would be, depending on what kind of business you are doing, you might say that at least I want to ensure that within the first year, at least I'm break-evening. By break even, it means I'll be having no profit or no losses. So it is good to have that goal so that as you now look at your financials, you are able to check, is that goal realized? Now, an example of a long-term goal is to expand the customer base and increase revenue by 20% annually. So you can see these two goals. You can imagine if this is our salon business. So we are saying in the first year, we want to be profitable. And then now we are saying in the long term, we want our business to be growing revenue by 20% every year. Now, you cannot just put a goal and say, I want my business to increase profits by 20%, and then you sit down. You must come down with clear financial strategies and goals on how you're going to make that happen. So you can see by having this all set up before the business begins, that means that you're going to run your business with a purpose. You'll be directing your actions towards achieving them so that the business can be part of the 10% that actually are going to thrive and to thrive for a long time and become probably a creator of jobs. So again, as we talk about these goals must be smart. Now, in finance, in budgeting, smartness is very important. So the goal must be specific. It must be measurable. It must be achievable. It must be relevant, and it must be time-bound. And if you look at the way I've put down my goals, you can see they have a time frame. So they have, in terms of time-bound, the T has been fulfilled. So like in the first one, achieve profitability within the first year. In terms of measurability, you can see what we are measuring is profitability. Profitability is a metric that can be measured. You get all the incomes, you less the expenses. So you can see it is measurable. Again, in terms of being specific, we are so clear. What do we want? We want to achieve profitability. So it is very specific. It is not talking about several things, but just one thing. And then, is it achievable? Yes, it is achievable, but you must have strategies that you have put in place. Is it relevant? Definitely. This is a goal that is relevant to a business because most of the businesses, unless you are an NGO that you want to start, have a profit motive. So that is an example of a goal that is smart. So maybe as we proceed to be sure that we are together, I would want you to chart for the long-term goal. Can you show me how the smartness has been achieved? Tell me especially the time. Do we have the time? Do we have measurability? Do we have, is it achievable? So can you put down and tell me from the SMART, pick the items from the long-term goal to show that actually you understand what smartness is all about. So I'll give you like a minute to chat it down. Again, if you have a question, you're free to put your questions as we proceed. So let me hear about the SMART and its relation to the long-term goal. So you have a few seconds before the minute is over. So show me the time. You don't have to put all of them in one slide. Just show me time. This is what it is. Measurability. This is what it is. So I'm waiting. I mean, good. Thank you. Yes. Okay. Yeah. So you can see Joyce has said time. We are talking about annually. Thank you. There's Mori. She's talking about measure. We have the performance index, which is profitability, and we have a value which is 20%. We have again, Kathy has talked about time, which is a year, and again, 20%, that is good, thank you. I can see, In terms of specific, yes, we are very clear. We want to expand the customer base. Thank you. I can see Brian. No, okay, Brian, okay, maybe for yours it's an example that you have given, yeah, but okay, but I wanted it to relate to what we have. But again, let me see whether you've gotten it right. So you are talking about to increase literacy standards in Rarieda sub-county by 4% in 2 years. Good. Yeah, thank you, Brian, for coming up with your own, which just shows the smartness. Thank you. I can see Ezekiel is talking about measurability evaluation of performance level. And to be specific for this question is one, we're increasing customer base. And I remember we have not said how much we're increasing the customer base, but we are saying that this increase in customer base should yield a revenue increase of 20%. So thank you for your responses on the chat. I can see we are together. So let me see if something has come in. Yeah, so thank you for that. So we can move in, we can move on. Yeah, so now let's come now to the actual part of what this topic is all about. So I want us to go through a step-by-step guide on how to create and forecast a startup. And as I start on this topic, I want you to chat if any one of you has a business that they have started, or any one of you is intending to start a business. So you can write, I have a business, maybe, and you just explain and just put some details, what kind of business. You say it is a plan, and the other scenario should be, if you have a business that is running, say I run maybe an X business, it is 2 years in operation, or it is 5 years in operation. So you can chat that so that I can, when I give examples, I can be able to guide in terms of or come up with the examples that are very specific to your case. So again, let me repeat the instruction, please, on the chat. Write down if you have a business, so you can that you are running. If you have one, write the name of the business and how long it has been there in operation. If you want to start a business, just put the name of the business, not really the name, in terms of what is the business dealing in, so that as I give examples, I can be able to somehow respond to what kind of businesses that you are having. And I can see a question from Francis, who asks, how do you know and tell how achievable and realistic this particular example or objective is? Now, remember, by the time you come up with a startup budget, you have assumptions that are logical, you have historical data that supports what you're saying. So in terms of the realistic, the achievement of your goal, those assumptions and historical data are the ones that will guide you. And again, remember, we've said maybe for the startup budget, it might be a bit different from now, the actual, but as you progress in the business, you'll be able to know what is happening. And the budget will be real. So as you start the business, you are going to be more realistic, unless something very drastic happens, like maybe when COVID hit. So actually, it is the past information, the current information that is going to assist. Now, before I start the presentation, in terms of the step-to-step guide, so let me see what you have, so that once I start giving examples, I can also try to relate to your business. So Ezekiel is, Hilda is planning to start a reproductive health clinic. Thank you. So I'm hoping whatever we do here will help you to know how to come up with a budget. Kathy is looking forward to start up a drug shop, which she anticipates to become a maternity center. That is a good idea. We have Muhammad is talking about EcoSoy, is a startup business that is into the production and processing of soybeans into meal and oil. I'm assuming, Muhammad, the business is already in operation. I can see Ezekiel is saying, I'm now trying to start up animal farming. Awesome. I can see Afondo, he has Fontech Media. Wow, 10 years of existence. He deals with the photography, videography, and IT consultancy. That is good. So as we learn this, Afondo, I would want you to tell us whether you follow or you followed what we have. And if there are any mistakes you made, maybe you can share on chat. I can see Mori is planning to start an NGO. My plan is NGO focused. I have started a pilot phase, not fully into implementation phase. The plan is to create an organization that solves health inequality that solves health inequality through mobile health clinics in remote communities. That is good. I can see Katrina, she would like to start making and selling medical profession. Innocent is trying to start a maize milling business. Great. Francis trying to start production of snacks for wide supply. Yeah, so I'm happy to see that all of you have business ideas. All of you are planning to start businesses. I've seen maybe one or two of you have already have businesses on the ground that are operating. So, so as we look at this, just try to relate the example that is here with what you have. And then finally, Elizabeth is intending to start, yeah, Elizabeth also would want to start a clinic to offer medical services and minor surgical services, but in future, she hopes to include maternity and inpatient. That's good. And then I've seen, I have a startup, I'm doing poultry, that's betting on small scale, about 5 months in operation. Now, one thing I just want to mention is when I look at some of the information that you've chatted, I really like that because most of you are saying, this is what I'm planning, but I'm also planning to add this. So you can see from what you have a short-term goal, and also you have a long-term focus. That is very important. And it actually resonates with what I'd said, so that you look at, this is what I can do now, maybe because of constraints of maybe just understanding the business constraint of money, of space. Then you are talking about how you plan to be in the future. That is very good. So I can, and again, let me appreciate that most of you are in the medical sector. I remember the last time I interacted with you again, I noted that most of you are in that sector. Yeah, so I can see again, Sharon also about selling medical products. Yeah, so good. So with those examples, I'm glad that all of you have very good ideas. You are very visionary and you're intending to start some business. So this is going to be quite handy. So we are going to go through step by step on how to create and forecast a startup budget. So I had come up with an illustration. Mine is again hypothetical. I don't have as an example in the medical field, but you can resonate with this because I saw that coffee or tea, most of us take it. So I decided to take something that all of you can be able to follow well. So from this illustration, it is, I'll read what I've written here. So we are saying that Chai Kahawa, this is a person called Chai Kahawa CK, is planning to open a new coffee shop in a prime location in a busy city center under the name at Bean Haven, which is a leading global restaurant chain. So you can see from this statement, this is something that is being planned. It has not happened. And if you look at what Chai Kahawa is doing, one, we cannot, other than the business being new, this business is going to be in a prime location. And besides that, it is in a busy city center. So you can see that's a good description to just give us fairly an idea of even the revenue, how busy the business is going to be. And then further, we are told the business will be offering the following products. So in terms of revenue streams, they'll be having revenue from coffee, they'll be having revenue from tea and light snacks. So those are 3 revenue streams. So my question here is, what will be needed to start off the business? So as we can, if you feel like you want to maybe put down, you can put down what might be needed. So what will be needed? Again, what expenses will be incurred on a monthly, in a monthly year on basis, or a one-off basis, and then how can CK determine the revenue? So these are questions that any person, intending to start a business is going to ask themselves. So it is important for us to know that whatever businesses we had charted, this is some of the information that we need to have at the back of our mind. So we are told for you to start that, for you now to come up with a budget, you need to come up with the following items. You need to ask yourself, what are the startup costs? So these are costs that you must incur for you to have the business on the ground. So for whatever kind of business you are doing, just ask yourself, what would be the startup cost? Now, examples of the startup costs that we have on this case, and this again is very hypothetical. One, if you look at how towns are, you are never given a space and you are told this is a restaurant. You'll be given just a space that is so wide. So one thing will be the issue of partitioning and decorating. So for our friend CK, he will need cost for partitioning and the decor. And in terms of the estimate of the amount, it is 30,000. Again, in a restaurant, people will have to sit down. There'll be tables and also there'll be even some furniture needed in the kitchen. So you can see we have equipment and furniture, 20,000. Again, if you're operating in a city or any jurisdiction, you must get the necessary permit from the various, either the county or the government. So there'll be licenses and permits, and we have a cost. Again, for you to acquire that space, you need a lease. Again, this, remember we said that this is a chain, is the Beans Haven is a franchise, so there'll be lease drafting, which has a cost. There'll be marketing and branding, because you have to brand as per the agreement in the lease draft. In the lease draft, we must do marketing, and then there'll be legal and accounting fees. So these are just examples of the startup cost. So for whatever business that you want to start, ask yourself, what are the startup costs that must be there? And it is very important that you factor for them. Otherwise, if you don't capture that, when you start the business, you'll now get maybe somebody knocking and saying, you know, your business is illegal because you did not do X and Y. Or when you start the business and then maybe there was an agreement you had with the landlord and you never put it down in writing. And then after 2 months, you've done the partitioning, they tell you now, can you vacate the place? So can you make sure that you have all the leases in place? You have identified all the requirements to start up the business. And then the next thing is revenue projection. So how much are you projecting to get? Now, in terms of the revenue, you have to say, you have to break it down. Is it on a weekly basis? Is it on a monthly basis? So you can say that I'm estimating that every week I'll be earning this, I'll be selling this number of my coffee, of tea, and the snacks. And then if I'm doing this weekly, then in a monthly basis, this will be the total. Now, be very careful about your revenue projections. Don't be over optimistic. And then you end up coming up with very high figures. You start getting excited. You are so happy that your business will really do well. And remember, this is just the planning stage. So you need to be very realistic. And we are normally told that it is better to underestimate your revenues than to overestimate them. So note that it is important that you don't overestimate, and that the guide is you are better off stating a lower value than a higher value that will never be realized. And again, as we proceed to how to do the revenue projections, it is also important that you come up with several situations. By several situations is where you'll say, in scenario A, this will be a very optimistic estimator. My business will do very well. I will get many customers. And then now from there, you will be able to know what to do. Okay, so make sure you are not over optimistic. And then now in your expenses, note that you will have the fixed cost and the variable cost. The fixed costs are the ones you must pay, whether you are making profit or not. So make sure you know what are the fixed costs. So for example, rent, whether you are selling or not, you have to pay rent. Utilities will be there. Insurance will be there. Loan, if you had gotten a loan, you'll need to pay for that. So separate your cost on the monthly, which are fixed, and also monthly that are variable. So for the variable, this will be salaries to the workers. They will vary depending on how many workers you have. The cost of goods sold, again, this will vary depending on what are you buying. So the more sales you make, the higher the cost of goods will be, and also the marketing and promotion. So that is an illustration of the very key things that need to be there. So even you, for your business, make sure you have identified the startup cost, make sure you have revenue projections that are realistic, make sure you have monthly fixed cost, make sure you have the monthly variable cost. And I've said the difference between variable and fixed is that the fixed costs do not change with the level of operations of the business. If you are doing well, if you are selling so much, it will not change. If you are selling zero, you'll still have to pay some of those expenses. So it is important to separate that. So what is the first step? Now, for you to be able to come up with a startup budget, it is important that you have a tool that will help you to come up with the budget. Now, most businesses will have either a spreadsheet or they are going to have a dedicated accounting software. Now, I'm assuming that for most small businesses, you might not have an accounting software, so you'll have an Excel that you can actually customize, and it gives you the formulas and the figures. So that is important. So if you have the spreadsheet, that will also do, but as your business grows, you can now buy the dedicated accounting software. So we are saying that a spreadsheet will be good for getting all your expenses down on paper and ideating. So it is important that these things, don't put them in a paper, put them in a spreadsheet, and then play around with the figures, and you see how your performance varies. Now, we've talked about coming up with the cost. We've talked about expenses. We've talked about maybe the things that you might need to buy. So let me talk about two kinds of startup cost. Anybody starting a startup will have startup asset expenses. In our example here, we had furniture. That is an asset, because the furniture that you buy, you're not going to use it for 1 month or 2 months or 1 year. It's going to be for more than a year. So those are assets. If your business is going to be big, you'll also decide, maybe I can have a small vehicle to be transporting a few things here and there, or maybe to go to the market to buy the products. So things like these are the startup assets. These are one-time expenses. So there'll be things like some inventory, some computers, some furniture, vehicles, and all that. You'll also have startup expenses. These again could be variable or fixed. And examples of these are rent. There are now things like utilities. And we had mentioned when we were looking at the other example, we had noted. And then it is also important to note that you must pay taxes. So as you compute your projections, always try and find out, and how will you be paying the taxes? Are you going to register yourself as a company? Are you going to be doing the individual tax computations? I mean, where you do self-assessment. So that one, you need to be very clear. So if your business is small, you can be doing self-assessment. If your business is big, you need somebody who has good knowledge of accounting and coming up with the tax requirements. So step 2 is make a list of your one-time expenses. We had already, so 1 was to choose a tool. Number 2, now come up with the list. We had already talked about this. And then I've given you examples here. So I'm asking, what other expenses would you consider in these categories? So I will not maybe give you time to write this, but I want you at the back of your mind to ask yourself, in your business, the business that you are planning, what are the expenses that will not recur, they'll be done once, and what expenses are going to be there every month. So look at my example here. For our Beans Haven startup, we have the initial cost. You can see we had the leasehold improvements, we have equipment, all the way going to the legal and accounting fee. So these are the one-time expenses. So do the same for your case. And then number 3, make a list of your fixed cost. We have already talked about that when I was just having the intro. So fixed cost, again, these ones you must do them very well, because some of these are expenses that you're going to incur every month. So you must know which expenses are these that you will incur, whether you are making profit or not, and they must be paid. And for you, the importance of this is that once you know them, you will be able to know that at any 1 month, you must have that amount, because these expenses have to be paid. And it can help you now to plan how much should your sales be, so that at least you cover these fixed costs. Okay, and again for the fixed cost, in case you get fixed cost that cover a year, for the sake of planning and budgeting, just if a cost is annual, divide it down so that you get now the monthly cost. So that is some of that. And from experience, you'll note that the fixed costs are very easy to predict because these are like standard costs for most people doing your business. Now, the next one is now go to the variable cost. Now, the variable cost, unlike the fixed cost, will not be very easy to determine because they vary. Just as the name indicates, they vary. They change with the level of operations. So, and the ones that will be very key that will be varying will be the cost of goods sold. This is what you are buying to sell. So the more you sell, the more you buy. So again, these ones will be based on your level of activities. Things like rent also, they might change. Maybe you might decide, let me go to another place that has more space because my business is growing. Utilities are very important. Bank transaction fee, again, these are variable cost. So it is important that out of the many expenses you are having, you are able to distinguish between those two categories. So you can look at an example or a sample of how the budget looks like. You can see my budget here. We have the first column, we just have the list of items. And then on the second column, we have the initial costs. The next column, we have the monthly cost and then the monthly revenue. So you can see I've been able to capture the startup items, the monthly fixed cost. And then if you look at this other one, you can see you have the monthly variable cost, which now gives us a very clear example. Now, if you look at what I have here, under the monthly fixed cost, I have put rent here. In the example that I gave you, I'd written the rent could be variable. Maybe you're operating in a situation where rent is variable. You might be in a place where maybe you go to exhibit your things. So the rent will keep changing on whether you're going to the exhibition, what space you have covered. So you have been given. So you need to know which one is fixed, which one is variable. So again, as I'd mentioned, when it comes to the variable costs, they are not very easy to capture accurately because they depend on so many other factors. And then we are saying that the data that you collect will help you come up with this. Historical data also will be very important. So in short, this is how your budget will look in terms of the startup cost, the monthly fixed cost, and the monthly variable cost. So the next thing is forecast your revenue. Now this one, as I have said, this one now tells us where will the money come from. And it is important, as I said before, you don't overestimate. Don't be over optimistic. Otherwise, if you are too optimistic, you might end up getting frustrated. And it is important that as you come up with the revenue forecast, have 3 scenarios. Just the normal scenario where you are saying things will be as usual, have the best case, and have the worst case. Now, when you have these 3 scenarios, they give you a better picture and a more realistic picture because you can either fall under the normal or the best or the worst case. And you can see down here, we are saying many startups make the mistake of building their budgets based on overly optimistic revenue forecast. So the worst case scenario is the one that is better because it will give you the worst that can never happen. And if your business is doing well, you'll end up performing better than the worst case scenario. The next thing is forecast your revenue. So this is the sales. Again, now in the revenue, again, still remember this is a continuation. So you can, if you look at it down here, we are saying in the best case scenario, we'll have 15% revenue growth. This is the the normal one, 15% growth, the best case 25, and then worst case 12%. So you see, with such scenarios, this helps you to have a better picture, and also it helps you plan. And then what do you need to do when you're forecasting your revenues? And just note, I like the slide, the first point there, we are told your assumptions must be realistic. Otherwise, there'll be wishful thinking. And most of us fall in that trap. So I'm sure if I asked you, those of you who are saying you'll start a hospital, in your mind, you are thinking the way you'll be so wealthy, your business will be doing so well. That is the best case scenario. Try and get the other and say, life might be difficult. So that now you can say, if business is going to be so difficult, then what can I do to actually address that so that it doesn't happen in reality. So in the case of CK, he wants to grow the business. So you don't just say, I want the business to grow. You have to come up with strategies. So like here you can see, for you to make your business grow, there's strategies that you can take. You can say you are going to allocate more money on advertising. You can have happy hours where you'll be inviting customers and telling them, those who come between these hours, you'll get maybe a free cup of coffee or a free snack. So that will help you now realize that. And then my question here is, what other strategies can you adopt? So ask yourself, what other strategies can you adopt for your specific business to ensure that you realize the target that you have? So now we have a complete budget that shows us the cost and the revenue. So you can see in our case here, our initial cost totals at 65,000. We can see our monthly cost goes to 16,300 and our revenue goes to 15,000. So you can see definitely we are not making a profit in the first month, but as we proceed and we implement those strategies that we had, business can become profitable. So now that I'm talking about profit, how do we come up with profit? Profit is simply the difference between all the expenses for the year and all the revenues for the year. If the expenses were more than the revenues, then you make a loss. If the revenues were more than the expenses, then you make a profit. And for most businesses, that is the desire. For those of you who are in the NGO sector, as much as you are not focusing on making profit, the most important thing should be you are focusing to at least break even. All your expenses must be met by your revenues, or the donors are giving you enough to meet your expenses. That is important. Now, let me go to the last part. I know time is not on our side. The last part in terms of making the a startup budget is, can you come up with a cash flow projection? A cash flow projection helps you to know when cash is going to come, that is the timing, where will it come from, and also it will tell you when are you going to spend a certain amount, what are the total spending for the period, and therefore this is the cash budget, the balance. Now, a cash flow statement is very important because it will tell you the months when you are going to have excess cash. This is surplus. It will also tell you the time when you are likely to have a deficit. So you need to plan for deficits so that you don't wait for that time and you have no cash, so you can plan to borrow. Or if you have surplus cash, you don't just have surplus cash lying in the business. You need to invest it. Otherwise, you'll end up suffering from having too much cash, which now makes you misuse the cash. So that is how we prepare the cash flow. So just find the opening. Okay, you have to say how much cash are you having at the beginning of the period. You have to have a column that shows how much revenue you'll be receiving. And remember, revenue is not sales. You can sell goods on credit. So if you sell on credit and you have given your customers 1 month to pay, then that cash will not be received in the month that you sold. It will be received in the subsequent month. So and that's why a cash flow statement is very important, because it now shows you the reality. Yes, I sold 2 months ago, but I'm getting the amount after 1 month. So that one helps you to know this is how much cash I'm expecting to have at a certain period. So you calculate your receivables. You calculate also your expenses. Again, even your expenses, if my expense for this month is, for rent is 2,000, for example, but I know I'm allowed to pay the next month, then you can see as much as the expenses for this month, the actual payment will be the next month. So the cash flow statement will now put these things in their real time perspective, not in the month that they were earned or the month that they were expensed. So the cash flow is very important. So once you have a list of all the cash for a certain period, all the cash expenses for the period, now you'll know whether you have a surplus or a deficit. Okay, so this is an example of a cash flow statement or a cash flow projection. You can see it is divided into months, which is important. For us, we are doing for 6 months. So you can see the first column here, we have the cash inflows here. These are the inflows. So they have investment and collection from credit customers. So this is the total cash there. We have now the cash outflow. So if it is project material, maybe they were incurred in January, but they are going to be paid on this month. So it shows the timing and the amount. We have things like subcontractor, marketing, all these expenses. So the beauty of the cash flow is that it matches the actual cash with the exact time it is going to be received or it is going to be paid. So once you get this, you'll now be able to know the cash flow. And this is the inflows minus the outflows. So you can see for this business in the month of April, the cash out is more than the cash in. So they have to plan for this. But down here, we have the opening cash balance. And you can note, whatever you close with is what you open the next month. You can see here, whatever I closed with is whatever you have to open the next business. So if you look at this farm, ideally, I can note that there's no time that they'll be running short of cash. You can see that all the months, the closing balances are at least positive. But you can note that in June, they have so much cash, they might plan to either to invest some of this cash, and this investment is probably what is bringing some of the incomes that they'll be getting. So in short, that is how you can make a startup budget. So maybe I will ask, Joyce. Yeah, so sorry, as I wind up, I don't know how much time I have left. I know I have very little time left. So maybe just tips on how to ensure that you have a good startup budget and also subsequent budgets. One, seek professional advice. Now, most of you are in the medical space. You learn things to do with medicine. Some of you are in NGOs, but you don't know how to do financial. This is for the accountants or somebody who has that background. So always seek professional help. You can get an accountant or you can get a financial advisor. And very important, you need to get tax advice. Otherwise, you'll be in trouble with the government. The next one is be realistic and conservative. When you are planning for something, and it is the nature of human beings to overproject and to be very optimistic. So we are warning you, can you be realistic and conservative? You better plan for less revenue and get more than plan for more and get less. And then also monitor and adjust. We've said that a budget is never 100% accurate. So as you continue your business, monitor the actual vis-a-vis the budget and then now make some adjustment. So when you do that, then you are going to have a budget that is going to be a tool that is working, a tool that will help you to make your business grow to higher levels, and also a budget that will assist you to achieve the short-term and long-term financial goals that you have for your business. So with that, I really want to thank you so much for listening. This is me, and I'm very happy that I've been able to have this session. So I will take up any questions. I'm seeing a comment from Betty. One is appreciation. She's talking about reading about the environment to know what is likely to work depending on the lifestyle of people in said community. How about when your goal is to start up something new in that community, something slightly out of the norm for said population? How do you tell whether people will adopt your good? Now, if you want to come up with a completely new product, you can actually do some casual questions where you ask people in that area. Supposing you can ask them, maybe, let's say you want to sell bottled water in a place where they don't use bottled water. You can ask them, what do you think about the water that you drink? Do you think it's safe? And then you ask them, do you think if somebody sells water, they would be interested in buying? How much would you want to buy? So you can see by having these cheat chats with the people in that area, you can be able to have a good idea. But also, let me tell you something is that when you start a business, don't address a problem that you think is there. Your business should be able to solve a problem that is actually there. So get the problem from the real people. Don't assume that this is their problem. So by having these conversations with them, and even by just talking, getting a friend who works in that, who stays in that area, can actually tell you this business is not likely to work. The people don't need the product. But again, don't be discouraged. Sometimes some people have different views, so you might just run for your dream, but make sure you've just tried to test on the ground to see whether people would accept that. If somebody had tried a similar business, what could have gone wrong that made that business not work. Yes. So, okay, thank you for the comments. I'm doing poll. Okay, yeah, I think, yeah, so thank you. I can see the comments you've learned, but I think for me, my pleasure will be maybe a few years meeting you and then you guys telling me, I've started my business, this is the budget. You really helped us and our business is doing well. I think that would be, for me, that would be the joy in terms of the output of this conversation that I've had with you. So maybe let me take it back to Joyce. Joyce, let me take it back to you so that you can guide from there.
Yes, thank you so much, Elizabeth, and thank you for this informative session. Actually, I have a few questions that I would like you to respond to. Would you advise a startup business to sell on credit?
Okay, now, when it comes to credit sales, one, they are very important because they increase your sales. But what is important is, what is the credit worthiness of the person you are selling to? So if that person is not credit worthy, definitely you should not sell. Otherwise, you are just giving goods for free. So as a startup, one, if you are having liquidity problems mean you don't have enough even to start the business. You are starting on a constrained situation. Don't sell on credit. If the business grows, you can actually start selling on credit. So I wouldn't encourage a startup to start on credit. If they want to start on credit, they should have a credit policy. You should have your own way. This is a small business, so you should have a structured way that you can use sorry, to be able to rate the credit standing of the customers.
So Francis here is asking in regarding to adding acquisition of license. Is it realistic to invest in quality certification by the National Bureau of Standards before actually starting production and supply, since markets always ask whether you have the quality certification before supplying them?
Okay, actually, I would say it is mandatory. It is a must. Otherwise, you are going to be arrested. Actually, you've breached our law because you cannot sell things that are being used by people that have not gone through the quality requirements. But I've seen certain situations where some people say that their products are very small and they cannot incur that cost. But if you want to go large scale, if you want to have products that are probably going to be in a supermarket, they're going to be offered on a wide scale, then you must have the quality mark. So your goods must pass through the Kenya Bureau of Standards, if that is in Kenya. Otherwise, you'll end up being arrested. And in case there's harm from your product, actually people will just say that your products were not good. But if you have that marker, then it means that your products have passed that and it was just an isolated incident. Yeah.
Thank you. I also have another one. For instance, I started my business and I have my own premises. Let's say I have built a structure where I'm going to start up my business. When I'm developing the startup budget, how will I account for this premise?
Okay, good. Now, we have something that we call the notional rent. Notional rent is the rent that should have been paid if you are renting such a place. Now, for you to know whether your business is doing well or not, you must actually input that. So you should ask yourself, in case I was to rent this premise, how much would I pay? So you must put that as an expense, because there's nothing for free. Otherwise, if rent is a big percentage in terms of the cost, you'll be actually assuming that your business is doing very well, but you have not imputed the rent. So even offices that are housed in their own buildings, they have to calculate that notional rent so that they know the actual performance, despite the fact that the actual cash does not leave the business. Yeah.
On that note, again, if I'm a sole proprietor and this is my business, do I also need to calculate the salary or wage that I'm supposed to pay myself?
Okay, now from a tax perspective, a sole proprietor is not supposed to put his salary as an expense. because the assumption is that everything belongs to you, even for partnership. So the legal structure of the business will determine. Now, if the legal structure separates the owner and the business, then you can actually put salary, and it is going to be an expense that is allowed, so that now after you've removed the salary expense, you can pay the taxes. But for a sole proprietor, whether you put it or not, from a tax perspective, the whole profit will be taxed on you as an individual. So maybe you can put it just to make sure that your work does not go unrewarded, but from a tax perspective, you have to adjust now that amount and remove it and pay the full amount for the business for tax purposes.
Thank you. And a final question.
Mhm.
You mentioned that a startup budget is based on the predictions and assumptions. Let's say I put my startup budget to, let's say, 50,000 shillings. But when I go to the ground now to buy the products, considering the cost of living right now, and I realize that it only covers 50% of the products that I want to start up the business with, how can I cover the 50% that is remaining?
Okay, now one, when we are using the historical data, it must be data that is as close to the reality as possible. So like if you're in a place where inflation is quite high or prices are changing, try to get the latest prices. And then also there are some, in the assumptions, you'll say that the economy will be stable. So if the economy is not stable, you'll say that these prices from experience, whatever is there now, 2 months from now will be maybe 10% more. So when you prepare your budget, factor in that amount. Yeah, so that now in your assumptions, you're going to say that the economy is not stable, there's an increase or there's an inflation rate of 15%, therefore prices are going to go up. And that's when now the budget that you have has already factored in that high amount. Otherwise, if you just go with the old prices and you make an assumption that things will be stable, you can see that already is a wrong assumption, because that is not the situation in the country. Yeah.
Thank you so much, Elizabeth, for this informative session. Personally, I've learned so much, and I'm so sure these are the things that we will need when we want to apply for the WMI seed grants and community development grants. These are the questions that we normally ask our scholars, the information that we ask them to provide when developing a budget. And I'm so sure they've learned so much, and they're going to implement, they're going to put all these, whatever they've learned as they are applying for the scholarship. We really appreciate your time and participating, accepting to be a presenter in our webinar. And to the scholars, thank you for attending today's webinar. Reminder, we have another webinar tomorrow, same place, same time, and it's going to focus on financial management. Professor Elizabeth is going to empower us more on financial management, and I'm so sure we'll all want to participate actively in tomorrow's webinar. Thank you all for attending, and good evening, everyone, and have a lovely day. Goodbye.
Okay. Yeah, thank you and bye. And I'm available for consultations in case you just need to be assisted. I'll be able, and I'll do it on a pro bono basis so that your businesses can be able to thrive. Thank you.
Bye.
Bye all.